All right, I think we've got Maruti numbers that has started to come out. So let's just quickly look at the stock price. The stock's up about 2.5%. The sales have come in at 9,995 crores. Profit has come in much higher as well, 632 crores versus the poll that you got there of about 593. So definitely a better number on the profit front. Sales also, expectation averaged around 9,900, and they've clocked in closer to 1,000 odd crores in terms of their sales. So definitely an improvement out there. We'll wait and to watch as to how operational performance has been with regards to EBITDA. Expectations whether they would see a rise of closer to 43 odd percent, coming in at about 1127 crores, but I'm sure that would have also increased. Totally, watch out for the contributions that have come in from their merger with Suzuki Powertrain India, which they had undertaken last June. So the EBITDA performance there. So another good quarter for Maruti, probably looking at how the rest of the month is shaped out. Remember, they had stopped production in the Gurgaon plant because Manesar had come back to scale. Also watch out for the domestic numbers as well as the export numbers. Volume figures closer to 2.6 lakhs odd was expected. Those numbers will be out shortly, so we'll be watching out for that. Total domestic sales, remember, were down for the April to June quarter. So that will probably have its way down as well. But overall, the numbers look fine. The stock, however, has actually corrected. It's down now to about just under 1% at this point. We've got their market share basically within the diesel car segment, which has been coming off. It's not been a good time, particularly for the auto pack as a whole. Even the petrol car segment, passenger car vehicles, the volumes have been dwindling over the last few months, and that's going to be weighing down as well. They've had to offer discounts as well right now. Diesel car purchases have also dropped down because the differential or the cost savings between petrol and diesel have been coming off because of the rise in diesel prices. So the stock right now is actually losing momentum, down about 0.8% at this point. Remember, in this quarter, Maruti had actually offered discounts had increased. So they had offered discounts of around 14,000 rupees per car in quarter one from 10,500 odd rupees discount that they offered in quarter four of last year. So even the discounts they offered were more. So that will also have its implications. So right now, that's the number that you've got. The net sales numbers is about 9,995 crores. That's off the poll figure, but the PAT number definitely is beating the street. We'll wait and watch for the margins numbers in a bit. Yogesh Mehta is joining in. Yogesh, any initial comments on Maruti's numbers?
Yeah, Devina, overall Maruti numbers are expectation, and we had expected something around PAT was expectation was 595 to 600 crores, which is almost there at 41-42% higher than YOY. Overall EPS is 92 to 93 rupees for FY14, and what we feel is around this level the concern is only the ongoing production, the production cut plus the diesel surplus capacity. All those will be there, and otherwise this was very much expected. So overall should do well from here also.
Okay, got that. What would you do with the stock though at 1400, Yogesh?
Sorry?
The stock right now compared to some of its other peers, does it look like it could be out of the doldrums and you could see some momentum pick up on the upside?
Per se for Maruti, momentum pickup upside seems to be very limited from here. Rather than that, there will be much more scope in other stock within the sector is much higher, like what we have in Tata Motors with the JLR exposure and the China volumes and all. So that is much better than Maruti, of course.
Okay, I think there is another income component also which has come in, 204 crores versus just around 100 odd crores that we saw last time around. So that has probably also lifted those numbers up the way they are looking at this point. The margins though have come in better off. I think they've come in at 11.4%, and it was an operating profit margins at 11.4%, and the versus figure was much lower. So I think they have seen a pickup in the margin number there, but surprisingly so, because actually they went ahead and offered discounts. Volumes were expected to be a bit lower, but the numbers optically seem in line, at least even on the sales count. 10,000 odd was the 10,000 crores was the expected number. They came in just around 9,995. The PAT number though seems to be a slight bit of a beat on the street. Not much of a reaction on the stock price. Let's try and get some reactions, on the stock and how it's likely to go ahead and in comparison with some of the other players. Remember, two-wheelers are out. They've reported numbers. Bajaj Auto disappointed a little bit. Hero MotoCorp, top line, bottom line numbers were muted. But the operating profit margin was what lifted the sentiment on the stock. Right now as well, Hero MotoCorp is trading higher. And that's the same case, I think, with Maruti. The operating profit margins seem to be on the higher side for the counter. 1422 on it right now. Yogesh, within the auto pack, when are things expected to turn around?
See, turnaround is something that, it is not more of expectation, but slow and steady growth is expected. So overall for Maruti, there is nothing as of now which can turn around from this level. But as I said, Tata Motors seems to be, and Mahindra & Mahindra, these are the one which can look at for better switching from this level, because growth is visible from here on in these two stocks.
Okay, got that. Maruti there, 0.5% is the move on the stock, 1421. Let's, we'll take that break and come back. We should probably be able to get you some more comments on the numbers in just a few moments as we'll get some analysts to talk about them. But let's take that break and come back. All right, another half an hour left to go for market closing. And you've got the indices still off by almost 1%. Though there has been, a slight bit of a nudge down further, about 1% lower right now on the Nifty, that's 59.27. Was around 59.09, so picking up a bit, 19,865 on the Sensex. Yogesh, currently what's the take now for the medium term on the markets?
Devina, for medium-term market seems to be little weak because of the recent guidelines issued for banking sector per se for controlling currencies, and there is a major little disappointed from the FI perspective and the domestic investor as well. And majorly we have seen only two sectors performing since last 1 or 2 months. That is technology and pharma, nothing apart from that. Auto is a little languishing, but so overall medium term outlook is still we are in a consolidation rather than going up. We see that we may see something around 58, 52, 5800 levels first, and then we can decide further what's the outlook on, because the 30th RBI meeting is also there. So we are watching out there, and then we can see the downtrend continue or not.
All right, that's Grasim for you, down about 3% odd. ACC is down 3 1/3%. Then you've got a few other names there from the broader markets to watch out for. Hotel Leela is up 9% today, so it's an outperformer in a market like this. and prices is up about 6.5% odd. We should get the management to talk post the numbers. Delta Corp is also up another 6% odd. Yogesh, sorry we lost you there, but you were talking about expectations from the RBI.
Yeah, so this time it's a mix of opinion because we have already seen that interest rate hike has been announced, and there are some restrictions, and restrictions were there on the banking sector. And for this we see that maybe the rate cut is totally out of the picture. But CRR can be there, which is a CRR hike can be expected here by 25 basis points, since liquidity is a major concern and inflation is not under control. So this is the only way where they can control some kind of growth to see some growth ongoing. So we are expecting that maybe there will be a hike in CRR this time by 25 basis points.
Is the pressure and sell-off in banks overdone now, Yogesh? Do you think that it could be a case of attractive valuations which could lure investors to buy into some of these PSU names?
Especially for public sector banks?
Yeah.
Yeah, Devina, see, public sector banks are now at very attractive levels, and valuation wise also it is almost a half times price to book. But the NPA and the asset quality is still is biggest problem. And we have seen some of the few small bank companies result which are growing NPAs day by day, and still they are not out of the woods. So valuations are still attractive, but we will still maintain a hold kind of call for buying this public sector bank per se.
What exactly are you picking and choosing from the markets at this point?
At this point, if there is any correction and consolidation, then we will go for larger name on HDFC Limited. The results are already out, so that looks a little better than other NBFC companies, and probably on pharma front also, like Dr. Reddy.
Okay, got that. Thanks very much, Yogesh. Really appreciate you taking out the time and sharing your views with us here on the show. We're going to take that short break. Coming right back. Half an hour left to go for market closing.